Hey, this is Josh Taylor with Trade Advisor Pro, and I want to thank you for checking out our video today. Now, before we get started with today's free Forex training video, I want to give you a chance to pause this video right now and go to our website. Trade Advisor Pro offers you free Forex training videos, and trade alerts. And folks, you do not want to miss our trade alerts. We send out a bunch of trade alerts every month that are top rated in the industry. We send you our exact trades right to your inbox. Pause the video now. Go to tradeadvisorpro.com/free, and all you have to do is register and then come back to this video, and we'll be sending you a lot more goodies to help you with your Forex trading. Enjoy today's training video. Hey everybody, we're going to go over today's Forex market preview. We're going to talk about some current pairs and what we're looking at for the coming week, and also a significant number of trades that my Pro Signals Direct and Mirror Trader Pro customers are in, and then we'll see if any extra trades will be available that we're looking at. I'm not going to be looking to get into a lot of trades tonight. It is now Sunday evening, March 31st. The Asian market is now open. It is 7:24 New York time, and the market is moving very slowly this morning, but it is moving. We're seeing some strength against the yen pairs. We have 3 yen pairs that my Mirror Trader Pro and Pro Signals Direct customers are in. We're going to take a look, start looking through some of these pairs and see what we're looking at. Some of these I'm looking at potential reversals that we're in one position. We're going to start closing out some profits here shortly. And then we're going to take a look at some of the pairs. So let's start with the Euro USD. Let's look at the weekly chart. And what we've been seeing over the weekly chart, that this pair for the last 1, 2, 3, 4, 5, 6, 7, 8 weeks has been on a downward spiral. Excuse me. And I'm going to normally I'd be looking for buy positions around a 68.91, which is a 61% retracement of this upswing. But the problem I'm seeing is a lot of the downward push that we're seeing on the euro is not based on technical, but more on fundamental. And what's the difference? The technical analysis are based on the charts. You know, like normally from this bottom to this low, we can pull a Fibonacci. We can see that we have a 61% retracement line here, plus a support base. This is a key level. You can see that price rejected here, here, here. So we could expect to see price have a bounce off here, but the problem we're running into right now is a lot of negative news coming out of the EuroZone. Cyprus potentially going belly up, banks potentially going, people losing 80% of their money that's been in the banks because it's in the uninsured banks in Cyprus. Bad news coming out of Italy. The market is so jumpy that I've pretty much been staying out of euro-based trades, because one day it's shooting up 100 pips, one day it's going down 100 pips, and it's really not making a lot of sense. It's mostly focused on fundamental, based on fears, and it's getting a little too jumpy. So right now I'd be very cautious on the euro, whereas otherwise the pound is not really being affected on that, and it's been easier to run. So we still have, on a weekly chart on this euro, has been pushing down. We still see a lot of downward pressure here. On the daily charts, like I said, 2700 mark here, which on this is the 2680 mark. So anywhere in that range, 2700 to 2600, we should see a bounce as price comes down to this level and takes a little bounce. But over the last few days, price has been steadying out a little bit. So, you know, I think the market right now is, I think everybody's realizing, well, we just need to hold off a little bit until we see what's really going on in the EuroZone. And you can see that the market has not been pushing significant. It's kind of flat. I think it's going to stay that way. I would just stay away from the euro for now. So let's go look at the pound, at what we're looking at here. Now the pound, when you look on the weekly chart, is pretty steady. The pound always runs, for the most part. We can draw out a line about here. We've seen some highs hit as high as, you know, that like to go up into the 168 mark. Where price really has been going the most is the 16300 mark, right in here. This has been a better key level, especially over the last year, and price has come down to the 53 level. Now price is broken down below this key level. Now we're looking at here, let's look at the time frame. that you can see even this 5375, 5400-ish range, 5350 range, somewhere in that range. All the way as far as 2008. We're talking October 2008. We're showing some serious support. A key level is you can see the price had a support. Price really struggled once it finally broke through, came down, struggled again, became serious resistance. When it finally broke through, became serious resort, bounced off, became support, 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 and then eventually broke through. Now here's what I'm going to be looking for. This 5375-ish level is a major key level, and once it finally broke through, and price has been working its way up on the pound over the last 4 weeks, but I still think we're going to see some downward pressure on this thing. So I would be looking to sell this pair a little bit below this. If you look at the daily chart, I've got this laid out about 52.44. So I'm going to say around 52.40 we're going to sell this thing, and I'm going to put a stop just above the 5300 mark, 53.20. In fact, if we're going to sell at 53.40, 53.20, that's a nice 80 pip pop. And then I would be looking for price to come down to 149 before we start closing out our complete profit. Of course, we're looking at a 240 pip drop, no, 340 pip drop. So while this price is starting to work its way down over the next week or week and a half, I would be expecting to be closing out profits. Now we will lock in profit soon. If we get a sell position here, as soon as we get up 50, 60, 70, 80 pips, I will close out half my position, move my stop to break even or slightly in, and then allow the rest of the trade to drop. Here's why: because we have turned a corner. What we don't know is if this downtrend is still the trend, and now we're just seeing a pullback. It's going to continue, or if price is going to, let me zoom this in, or if price is going to hit this, take a little bounce down, and then shoot back up into the range, into the old range that we showed you back on the weekly chart, which is in here. You see that it's been a nice range. So it's broken down below the range. It could go back into that range. So to protect ourselves from losses on that trade, we will close out profits as we are pushing down, and we will move our stop to break even or slightly into the money while we allow price to break down. Even if price came back, we have a chance. At least we closed out some profits, and we locked out any loss. So I will be selling this pair around 52.40, putting a stop loss at 53.20, and my profit target will be 4,900 on that trade. Let's look at the Swissy. So let this chart load up. We bought this pair. Hold on a second. Let me put this video on pause real quick. I'm going to go back and look at where we're in on this pair. All right, we bought this pair at 94.90. 9,500 was really a good base. We knew that price would break down a little bit, but this thing is still continuing to trend up pretty strongly. We are having some hesitation in here, but as the price has been moving up, we did buy right here in this level here, and I think our stop loss somewhere, I forget where I put my stop, 49.40, somewhere down in this range here underneath these lows here. Yeah, we got it at 49.90. So I'm expecting price on this to continue working up. I think we have our profit target. In fact, it is at 96, a little past the 9,600 mark. I am going to let this trade sit a bit, and because this dollar has been strengthened against a lot of these pairs, especially European-based pairs. A lot of nasty news coming out of the Eurozone. Of course, nothing great coming out of the U.S. either these days, but it's better than what's going on in the Eurozone. So we have been seeing for a long time the Swissy strengthening against the dollar strengthening against the Swissy, and I expect that to continue to go. In fact, yeah, we're at right here at 49, right here, right in this range. I mean, we got into this trade, I do believe, on Friday, and it is working its way up, and I expect that on the 4-hour chart, on the 1-hour chart, actually price on Friday went almost as high as 95.50. And it's already working its way up. You can see this. If price goes up to 95.50, I will close out 50% of my position, lock myself in at break even or 5 pips in, and allow that trade to run. Let's look at the dollar yen. And we got in this trade at 94.10. We've been in this trade for quite a bit. And here's what I'm looking at. I don't like on this weekly chart how we've had some serious pull down on the yen cross pairs. There's a lot of crazy stuff going on the yen. Things have been up and down. What they're going to do over there. And I do see that we had a drop down for a couple of days and then a doji last week, which means the price is at equilibrium, and we're looking at the buyers and the sellers have had equal pressure. When you see a doji sign like this, a lot of times what that is the end of whatever the trend started over the last few candles. We're seeing a reversal of that. So I do like that the fact that this doji has closed like this. It's just showing that the downward pressure may be over. We could see a nice push up. I don't know. We're expecting this trade to run up. I think in the right up in this peak here, 9,600 range. I think is where we are pulling out the rest of our profits on this trade. But again, we're up right now, 24 pips. The market just opened, and the market's not really booming right now, but it is moving up. On the daily chart, you can see that it has created a nice strong base at 9,400, which I like. And so our stop loss is right down this range. I will be moving my stop up later today once I see this market start moving up. But what we see is we've had a nice run up. Just like any trade, it rarely just goes straight up. You always go up, go sideways a little bit. Up, you get a little bit of a pullback. Up, and a pullback. And what do we do in an uptrend? We buy the dips in an uptrend. Where's the dip? There's a dip. Up, dip. Goes up, went sideways, a dip, great opportunity. When you see these major news announcements that cause the market to freak out, when you have a strong uptrend like that, great opportunity to buy when you see these things like this. In fact, this day, man, that was, I think we did buy when the market came down to that point, and we cleaned house over the next couple of days. I do believe that I sent that to my Pro Signals direct traders. I took it personally, but again, price has now formed a strong base at this 9,400 level. I love this, the way that is holding very, very well. Even though the market has been really sideways, it's been range bound between 9,400 and 9,500. In fact, more like 9,400 to 9,450. It's not really been moving much. It's kind of range bound. In fact, if I zoom this up and even closer, you can see it's been really ranging in between here. Cut that down to a 4-hour chart. You can see that when is this date here? Since the 11th, the price has been slowly but surely working down. But it is somewhat in a sideways movement. I'm expecting that we will get a little bit of a price run up. I like to look more of a long-term approach. 4-hour charts I really only use when I'm looking for shorter-term trade opportunities. When I'm looking more in the longer term, I'm looking more at this. Now, we have been seeing the market pulling down, but I do like this base. Worst case scenario, we're going to see price shoot up a little bit. We're going to close out some profits on that trade, lock it in, and then we'll see what happens on the rest of the trade. But zoomed in this weekly chart, daily chart again, we could be looking at a potential reversal here as well. So what we don't know, and you never know, hindsight is always 20/20 when it's trading. That's one thing a lot of traders don't know. And it's one thing we deal with over at this business. You know, we get a lot of new customers. They try it out for a week, and tell us. We get all kinds of nasty emails. If we have one losing trade, especially from customers don't even have a paid subscription, telling us our trades suck. They didn't even see the month before, like this month so far. Our Pro Signals Direct have 34 winning trades, 6 losses. Now, I mean, that's kick butt, guys. And you're not going to see a lot of services like that. However, you get a new customer, it signs up, and you have 2 losing trades in a row, they instantly think you suck. So, anyway, the reality is we don't know until, give me 2 or 3 weeks, whether this pair was going up or we are looking at the market weakening right here. So this is one thing you have to be careful of. Again, trading is a business of probabilities. There is no guarantees. We are looking at the highest probabilities right now. So what I'm seeing is we have a strong base. As price starts moving up a little bit, I am going to lock in some profits very quickly to move my stop to break even to protect myself from any downside risk on this trade. In fact, I'm doing that on all the yen pairs. We also happen to be in the pound yen. And we got in this thing at 192.80 range. Right here we see this thing has been range bound. A good range though. It's been ranging over the last couple weeks from about a low of 141.80ish, a little bit higher than that actually, as high as 145. So that's a nice little range. You can pull some serious pips out of that. And we got into this pair at 132.80, I do believe, or 132.90. And I'm not looking directly in my trading accounts right now, but you can see that price hasn't gone too much below what the one where we're our entry point. But what I don't like is the fact that the last 4 or 5 days, last 5 days, we're talking about today too, obviously, that we've seen a slowdown. So what we've seen here, if you look at this uptrend, strong uptrend right here, okay, and pull back, nice uptrend, break down, come up. Now here's the problem we're looking at here. We are seeing sideways, so there's an opportunity to be trading in this sideways channel here. But when you look at this trend, what is a definition of an uptrend? You always have a consistent level of higher highs and higher lows. So you got a low, then a high. And then the next low was higher than this low. And then you got the next high was actually even with that one. The next low was higher than this low. The next high was higher. You see how it's stair-stepping its way up. Strong uptrend. Now, what I don't like about this right now, we have a low here, then a high. Now the next low was lower than that previous low. Okay? Now you can see here, if you were smart and really paying attention on these trades, you see these pin bars. When you saw that pin bar, you should have instantly been looking for buying opportunities right there on that spot as soon as that candle closed out for the day. Same here. This one would have faked you out. You would have gotten some pips off that. But another one right here on this doji, that would have been a great opportunity to take a long position. But we're kind of going sideways. But on the overall picture, what we're seeing here is that you get a high, a low, and then now you have the next high. And now we're going sideways. The market is kind of at a point. It was at a flux. It's been going up, up, up so strong for so long. Several thousand pips this thing has moved. Okay, almost 3,000 pips over the last 6 months. I think it is in that range, and actually more about 9 months. But we could potentially be seeing that this thing is gassing out. So again, on these yen cross pairs, I'm going to start closing out profits early and not let them run too long. I'm also in the Aussie yen. I'm in 3 yen pairs, and I don't like being in a lot of yen pairs at once because if anything happens to the yen cross pairs, you could obviously lose multiple trades in one shot. But the Aussie yen is one of my favorite pairs. I usually like to take long positions on this because you understand the dynamic of what the risk on or risk off environment is, and I talk about it in other videos. But we are seeing this thing starting to round off, and I got in this trade based on the daily chart at 98.32, which is right in here. Actually, let me go back and check real quick and make sure that's the exact spot I got in. Yep, 98.32. So let's see if I can get this thing to 98.32. 98.32. Okay, so we got in this trade at 98.32 because there's been a nice strong base, but the price is broken below the base. And what I don't like is that we're seeing a rounding. Now we could see a little bit of the market backing off on the Aussie yen, and then it continue skyrocket up. But the fact that we're seeing some news coming out of the Japanese market that could be strengthening the yen a little bit, and could force yen pairs down for a little while before we look for positions again. We could see the end of this long run on these yen pairs, and that I don't know. I don't like this rounded top. So the fact that we're into this thing at 98.32, my plan is as soon as we get at break even or even 20, 30, 40 pips above, which I'm guessing it will be tonight. I think we're seeing some strength against the yen right now. I'm going to go ahead and close that trade out and get out of it and dump it. More interested in the pound and dollar yen again than I am the Aussie yen right now. And I think I'm going to start backing off on Aussie yen trades for a little bit. Doesn't mean I won't still be taking positions. I might take another position down here at 97.21, take a nice little bounce up, and then close out some profits. But I'm going to be very careful of that trade. Let's look at the dollar Canadian. Now the dollar Canadian, it's been trending up. This is a strange pair to trade. I'm going to be honest with you. It's been trending up, but now the last few days we've been seeing a pullback, and I'm expecting on a weekly trade this is a pullback going to continue. We're going to eventually see this pair continue shooting up to the 104.50 range. Could go as 104, 105. But we'll have to see. On the daily chart, I saw this pair going up. Price had already come down to the 102 mark, a little bit lower than that. Let me zoom this in. As low as 101.80. So we bought at 102.00, actually 101.99 is where I got in. And price has pushed down. You can see here, when you see this candle like that, price is pushing down. We did see a doji right here, and now price over the last few days is pushing up, but it's been slow. So we are right now 36 pips in the negative on this trade or so. And it's just sitting here. We've got an 80 pip stop, I do believe, or 60 pip stop. So, but this pair has not been impressing me over the last few days. And I may just go ahead and close this out as soon as we get the break even at 102.00. I'm not really, I was expecting the price to come down and hit like it did before, but one thing we're looking at here is almost, you can see an almost rounding out, okay, on the daily chart. But of course, you look at the weekly chart, and this could just be a pullback on this uptrend continuation. So we don't know that, and that's again the real issue with trading Forex is you don't know until where it's already happened. So our goal is to look at key levels, look at the trend, find opportunities, and get in the way of progress. And when you start seeing reversals, we need to get out of trades as soon as possible and wait. And sometimes, guys, I have gotten out of trades lots of times. I've closed out trades at break even that we've been sitting in here. Just 2 days later, the trade shot up 300 pips and we missed the trade. But you know what? The reality is, staying in the trade, sometimes if you feel that it's not going in the direction you want it to, it's best to close out and not gamble your money away. This is why we've had 34 wins, 6 losses, and we've had 4 or 5 break evens, because we did not we don't want to be taking trades that we're risking our accounts. And one of the biggest problems out there with traders is they tend to just feel like they have to constantly be in a trade. And they're just clicking buttons based on, a bunch of news announcements instead of really taking the time to analyze the whole picture. Aussie dollar, US dollar. Now we got in this trade a few days ago. I don't know if we hit Thursday or Friday it hit in. We got in at 104.00. And his price has been pretty much range bound between the 101.50 mark, and let me pull this up so I can figure out where this mark is, in a 106.00. And we see that price has been getting in here. This is based on a weekly chart, that we are near the top, closer to the top of that range. But we're not trading off that weekly chart. If price came all the way down to 101.50, we'd definitely be taking a long position. But that's going to take a while to get there. But on the daily chart, now this is a mess. Apologize for the mess. But we took a trade right at this 104.00 mark because we saw the price easing down here, and I saw that the 104.00 to 103.80, 103.70 range was a key level, a very choppy key level. But I think I'm changing my focus here at this point, and I'm looking to actually sell this trade. We're in this trade now. We're up in profit, but I think what we're going to do is close this trade at 104.40. Get out and then take another sell position at 104.50 and then put a stop right here at 105.20. I think we're going to keep it nice tight, a 70 pip stop, and then I'll be looking for price to run down to 103.00. I'm going to start pulling profits out before that, close out completely at 103.10-ish, 103.12. But again, we're long. I was expecting the price to continue to run up. I think we're trying to close up at 105.50 or 106.00. But I don't know. I'm thinking we're just going to close this trade out early as we get a run up over the next day or so, and then we'll sell this trade if we can get a bump up to 104.50, because I think we're sitting here at a key reversal level, and I think we're going to see the Aussie weaken against the US dollar. Let's see here. I've already done pound, yen, euro, yen. I'm not touching. Actually, I do have a sell position waiting here. I think at this 101.80 level, which is a major support level, plus it's a Fibonacci retracement level off of this from this high to this low. And I'm expecting that it's also a major key level. You can see here that this has been a pretty decent little key level over the last couple of weeks and even previously. And so what I'm expecting that we'll see the euro yen move up is what I'm hoping. About another 100 pips is what I'm looking for. And to have this thing hit and then have a bounce down. Because again, we've been uptrending for quite a while. You can see this starting here. Up, 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 pull back up, pull back up. Now, what we see when you zoom this up a little closer is that we have a high, then a low, a lower high, and now not a lower low, but it's about even with this key level here. Now it's broken through, but if you draw out that line at 120, right at 120 even, you can see we have this is a key level here. It has formed a strong base at this level, which would have been a great time to take a nice little buy position. And we did take some euro buys. I think we did take some euro buys off of that and close out some profits, but they were small because the market's just not moving strong. But even though price did break through a bit, as much as probably 100 pips here, yeah, a little over 100, about 130 pips broke through, but it rejected, and you can see that the bodies never stayed below the 120. So what that means is that before the candle closed for the day, the market pushed price back up above the 120 mark, or right at the 120 mark, and kept it above it. But I still think that we are still looking at a turnaround here on these yen cross pairs. We're going to be very careful on buying, especially on the euro based pairs. Now, we're also in the New Zealand dollar. Bought at 83.60, I do believe. Prices on the weekly chart is moving up, up, up. We did have a pullback below this original trend line, which has been going on for some time. Is now working its way back up. And we had a pullback last week, very slight, but it was enough to give us a little pullback so we can take this into our trade. You look on this chart here, price was going up, up, up. We waited for a pullback to 103.60. Price came down a couple days ago, hit us in, and is now working its way. We'll be locking in profits soon because this trade is still working its way up. Low, high, low, high, low, high. It's kind of went sideways here for a little bit. And it's continued to work its way up. It had a nice pullback, and I think we're seeing this thing pull back up. So let's look at. We already looked at the Aussie yen, pound. I mean, let's see, euro pound. If I get this open, something's going on with my charts here, guys. What the heck is going on with that? I'm guessing that's my euro pound. Here it is. Okay. All right, the euro pound was on a strong uptrend. We had a massive euro push we've had lately. And now the euro against the pound has dropped significantly, almost 400 pips over the last several weeks. You can see this pullback stronger on the daily chart. So I'm looking for a sell position. And the price is down right now at 84.28, 0.8428. And I'm looking to sell this pair at 0.8495. So if we can get a strengthening on the euro against the pound, which means either we get some great news out of the EuroZone or the pound just has some really crappy news that could force this pair up a bit, because we are seeing some weakening. We could see a nice little bump up to this line and take us into another short position, because I think we're going to continue to work its way down. I think the euro is just going to continue to struggle. So looking to sell the euro pound at 84.95. So that's it for the day, folks. Again, stay away. Be very careful of the euro trades right now until we see some settling in Cyprus, that they're going to make some decisions that are going to be understood what's going on in that market one way or the other. Okay, because right now it's kind of a toss-up. So just be very careful, and good luck. Folks, I hope you enjoyed today's training video. If you have not done so already, stop this video now and go to tradeadvisorpro.com/free and register absolutely free for free Forex training videos, and free Forex traded alerts directly to your inbox. Go to the website right now and register for free. All kinds of goodies for you. Thanks a lot.